checking in those bags, shopping when we land. Big FN bag of ballin'. Plead the fifth if I get caught, they talk. Came through dripping on them, I been saucing.
Yo, what is going on, y'all? J Trades here, back with another brand new day trading recap. And in today's video, I will be doing a recap on all the live trades that I took today with the Essential Traders University team. So if you guys want to come and learn how to trade with us and learn from courses, things like that, make sure to click the link down below, www.essentialtradersuniversity.com. That's where the course is going to be of my full in-depth strategy from A to Z for beginners, intermediates, or any traders that want to become consistently profitable and make this as their career or job. And also, we also have a Discord group for free. So if you guys are interested in joining a group of like-minded traders, make sure to check that out down below. Nonetheless, though, let's get straight into the trades I took today, all right? So today, I'm not only going to go over trades I took today, but also something that I recently implemented to my trading strategy and combines everything that I use in my strategy that makes it a lot more, I guess, in a way, more consistent, okay? So I'm going to go over that today, and that's going to be aligning with all trades I took today, essentially. So first off, I took 3 different types of trades today on 3 different assets. Well, not 3 trades, but we took trades on 3 different assets today. I've recently started implementing trading USD JPY because I actually kind of like how it's moving, and it's in a pretty key moment right now, making a recovery back to like 150, 160. So there's that, but nonetheless, this is the trade I took today on USD JPY. Again, all the signals are included in the paid premium Discord server. If you guys are interested in signals to pass your challenges or get funded 100K or things like that, check that out. But this is essentially what I was seeing on USD JPY. Let's go out on a higher time frame, right? So higher time frame, as you guys can see, this is exactly what I was talking about. We are making a recovery. Maybe not to 150 or 160, but we are making a recovery off this very bullish momentum that we had previously. We just had a leg down, and we are just basically retracing all the way back. And at some point, we are gonna be breaking these highs to then potentially see price going even higher. If we go on the daily, that's an all-time high. I think that was an all-time high. Yeah, I think that's an all-time high. So at some point, price is gonna do its thing and then break up and retest this area, which I do see tons of liquidity that we will drop again. So I have a very bullish bias when it comes to trading USD JPY. Now, yes, there are going to be big downside moves as well, but they are not going to be as high probability as the upside moves. So what I saw was I first started on the 5-minute. Now that I know my daily bias, I know in the 5-minute time frame, I want to mark out areas of liquidity and interest. I already have my big major zones, which show me premium pricing and discounted pricing. So premium pricing is above here, which is where I want to be looking for sells, and discounted pricing is down here, which is where I want to be buying. So we are in a buy zone right here, as you guys can see. Another area of confluence is I do draw my areas of liquidity. You guys can see we have actually a lot of liquidity standing down right here. You can even draw a box around this area if you like. I typically like to use lines to make them very precise, but we have a box of liquidity right here, as well as keep in mind the time of the day. This is still pretty volatile hours because this is a USD pair. So as long as the USD New York session is open, it's going to be volatile, and we have that volume helping us kick in the volatility and helping us essentially play these liquidity sweeps. So right here, you can box out liquidity right here because we have a lot of areas of liquidity. And from this liquidity, we want to make sure this is a valid area of liquidity. And how do you know? Well, first of all, this area of liquidity broke structure right here, okay, to the upside. Not only that, but we had a very impulsive move from this area of liquidity, which gives me very high confidence. It's a very high area of liquidity standing right here that we want to play off of again. So we have this box area of liquidity, right? Now you can again draw a line or use a box. Personally, I would actually use a box in this situation because we have tons of levels of liquidity that we can potentially sweep. But I also have a specified level of liquidity right here drawn out on this level. And we did actually sweep that liquidity just barely. We barely touched it and we actually swept it. And how you can tell we swept it is either we break below and then come back up. If we continue going down, that's not a liquidity sweep. We just continued going down and breaking structure. But nonetheless, here as you can see, we had a very nice wick reaction off that liquidity sweep. And because the candle body closed above the liquidity once it swept, I am entering the trade. Another area of confluence I can also utilize is the trend line. Okay, we have major support right here, or major resistance right here. Resistance, creating a new leg down, okay? We have major resistance that also broke through that you can use as an entry confirmation. So I entered obviously right off this liquidity sweep, And I have my lows below here because you want to be looking towards the left side, right? We do have an area imbalance here potentially. I don't see us filling this balance at all. I do see us potentially touching and coming back up. So I have my stop loss right there. I don't want a major big stop loss like down here. That's not a good risk reward ratio. So 1-to-5 risk reward ratio. All my trades I call out in the signals room are very high quality risk reward ratios. Most of them run from 1-to-3 to 1-to-5 or even higher. My highest risk reward ratio was I think 1-to-20. It was on gold, which is pretty crazy. But anyway, nonetheless, that's not the point of this video. But I entered here. Again, stop loss right below, areas of liquidity right here, don't forget. And we are targeting essentially previous highs, previous liquidity swings, okay? So we have liquidity here, and we also have liquidity here, okay? I draw out my areas of liquidity so I know where I should be targeting, okay? And not only that, but we also have a pretty big gap right here to fill, okay? We can fill this gap, so this should be a pretty efficient move to fill this gap up. Personally, I wouldn't have take profit levels actually for this. I'll just have one take profit out of the high liquidity because it is very common. It's very, very eye enticing. It's very easy to see this area of liquidity that price is going to go towards. Now, if you have multiple areas of liquidity all around the chart, then I would maybe potentially have price targets. For example, I would target this area. This is a pretty key area, as you can see, of rejections. Okay, price action rejecting and responding to this level. So that'll be a price target. But for this trade, held it all the way through till TP and we're out. In fact, you don't even have to hold it all the way through TP. If you see candles like this where we are rejecting like that, you could even close out early. Dude, it's not gonna make a big difference. Some people, they literally have their TP exactly here. And personally, I understand sticking to your plan, but we gotta be dynamic as traders and we gotta understand when new information comes to the market like this. Okay, when you have 2 wicks like this is showing weakness over here and showing sellers are stepping in. So I want to exit right there before we have a major pullback or even get close to break even. So that is the first trade of today, okay? Again, you guys can see we have liquidity sweeps all around the charts. Again, determining which ones are valid or not are obviously based on experience. But another trade I took today was on, let's get rid of that, was on oil, okay? I love trading oil because oil provides very good risk reward ratio trades and very big moves as well. So for oil, what we want is very good entries because oil is very volatile, right? So again, looking at oil, we are very bullish on the higher time frame. I'm just going to tell you that exactly. We are very bullish on the higher time frame. We went to a pretty key area. We filled this whole entire imbalance and gap to the upside, okay? We broke structure here. We're breaking structure multiple times above here, right here. We broke structure, retested it, and we are pushing back up, okay? So what we want to see here is basically a move up, okay? We want to be playing upside. Now, the thing is, I did not play upside today, okay? I missed these 2 moves right here because I was looking at other things and I had alerts over here. I just did not make it in time, okay? So that's unfortunate for me, but we were able to catch a nice move down, targeting this key area right here that will potentially reject. So there was that trade right here. Again, if you were to trade this and you're looking at oil the whole time, yes, I would have taken this liquidity sweep right here, where we closed above. Once we close above, I would enter, stop loss right below, and we can just push. That's it. But because obviously we have, you know, me looking at other things, I took this trade right here where we had a liquidity sweep right here. Now this is a very key area of liquidity right here. Very big impulsive move down. Okay, we tapped into it. We had a nice wick. I entered, stop loss above that candle. And again, because oil is volatile, you could actually have your stop loss more so above here because you see we have liquidity resting above here as well. The only reason why I took this liquidity level was because look at the impulsive move that came from this liquidity level versus here, which is choppy, right? We want to be picking the best quality liquidity sweeps. So that was very high quality liquidity sweep. My stops, I think I put it back here. I think it was above here. Again, we had liquidity here, so I want to place above there roughly as a reference point. 1-to-7, boom, easy trade. I had my partial take profit right here at this level. I'm gonna remove this alert because this was also a key area that we were looking at, right? We had price reacting to this level very nicely, multiple times rejecting, right? As you can see. So that is why I had that marked out as a potential key area. So once you take that trade 1-to-7, we are done. Okay, I think that's all the trades I took for oil today. We had a liquidity sweep up here previously, but that price is way too high for me to be taking a liquidity sweep. And that's also from, I think, a few days ago too. So I wouldn't be playing that liquidity sweep nonetheless. But that's a trade on oil I took today, and let's jump straight into the next and last pair, which is gold. So gold, I love trading gold, so I took 4 trades on gold today. And this is just basically my best asset, most profitable asset I trade. So I love giving out gold signals all the time. Signal these to the group chat. If you guys are interested, again, you click the link down below to join. But right here in gold, again, basic textbook setup, okay? We are bullish on gold, first of all, okay, on the high time frame. So that's why you guys can see buyers are taking over this zone at some point. Buyers are taking over because we are bullish. Bullish moves taking over supply zones. Strong liquidity right here. I did not take this liquidity sweep because this area liquidity, it didn't have as big of a move as this one, first of all. We want to take high quality liquidity sweeps. Second of all, this was more so a continuation liquidity sweep. So I did not take that one. Looking at this liquidity sweep, we did not sweep, okay? We did not sweep. You never want to take the trade unless we actually fully swept liquidity like this. Once we swept liquidity, I did enter in the middle of this bullish candle going up because we closed above. And then I have my stop loss below this candle wick right here. I actually had it a bit more below. I don't like to keep my candle wick right below, like right there. I like to have and give price a bit more space. Usually it'll be 0.6, 0.7% as my stop loss size. Again, this varies on trade to trade. Another thing we can look at is because there's so much liquidity in this area by these major big wicks, I want to have a bigger stop loss, right? That's something you want to take into consideration. So had that big stop loss and we basically pushed into profit right here. I was targeting this as my final TP and we hit it. That was a 1 to 4 is final TP, and runners basically hit that. I don't keep runners, but I know people that do keep runners, so there's that. Nonetheless, that'll be the target right here for this trade. Target this area's liquidity. Let me move this liquidity over here, actually. Next trade, you could have took shorts here. Me personally, I wouldn't have taken this short over here on this liquidity sweep because if you look left, we have so many areas of liquidity that we could take. It's extremely hard to decide which one price will take. So I essentially skipped out on that trade. Now, again, bullish bias, we are looking for longs. We come back in this area. I know we have a lot of buyers here because of previous price action. Entered off this candle. Now, this is a bad setup right here because when you have a very bearish candle like this, it's not good. First of all, that's a very bad sign. But to me, I've seen this pattern play out multiple times where essentially we have a big push down and then right after a big push down, if it's liquidity right here, we have a big push up, right? That just means orders are being absorbed at this level. I did not mind that. Entered in the middle of this bullish candle pushing up, right? Once we went above this area liquidity. And then stop loss below here, not the best stop loss. Could have had a tighter stop loss, but there would be potential of price potentially retesting. Very unlikely, but stop loss down there just in case. And then we targeted areas liquidity. So we had liquidity up here. So that's our final TP. And 1 to 3. Very good trade right there. Now, as you can see, these would not be good quality trades right here. Like shorting this is awful. Choppy price action, first of all. There are areas you could say liquidity was here. But again, personally, this just is not high quality liquidity, especially when you have an imbalance above right here. If you guys haven't noticed that, I like to make sure that I understand where price is going before I draw these areas liquidity. That's why it's very important to have an expert or someone that's very good at spotting valid liquidity to be playing liquidity sweeps. Otherwise, it's actually extremely dangerous because you're going against the trend essentially. So again, these were my take profits, take profit right there, and I marked out a high level liquidity over here, which never got hit. Again, this is a very extreme level of liquidity, and this happened during active gold hours. This is very passive gold hours. Price doesn't move that much, so you would expect essentially volume to die down and stuff. So price is not going to get to that level of liquidity. We have a very strong move here though. We sub liquidity here, and what happened is we actually made a fair value gap. Okay, so this is an A+ setup right here, despite it not moving as much as I wanted it to because the volatility due to time. But this is A+ setup. The reason why we sub liquidity, right? And then basically we actually had a very big displacement and break of structure right here. We broke past these lows off this candle, and then we had a fair value gaps on the 5 minute. I think this is a 5 minute fair value gap. We had a fair value gap on the 5 minute. So I would basically play this once we retest that 5 minute fair value gap. So that's what I did. I entered off the fair value gap, off the 1 minute, entered, and then my stop loss is above here just in case, because we do have more liquidity standing here. Now, to be fair, at this time of day, price doesn't move as much. I could have kept my stop loss right above this fair value gap for a better risk reward, but I want to be winning trades, right? We want to be winning trades, and I'm not going to be taking the risk of taking an L trade with a bad stop loss, right? You want to make sure you're winning trades. So that's a trade. My first take profit I signaled to the group was this level right here, which is the exact level spot on where it rejected. So that would be a great take profit level. Now, not the best risk reward ratio like usual, but if you held it, you would have got a nice risk reward ratio. So I'm gonna get rid of that. I don't need that anymore. And then in fact, what happened is I actually re-entered another position. Once we retested this 5 minute fair value gap, I re-entered again once I saw a reaction, okay? What happens is price could either reject this gap, or price could fill the gap, wick out, and then continue going down. So I have my stop loss above the gap this time, knowing that price is very bearish at the moment, and basically targeting these lows right here. This is an area that I was looking at, okay? And look at this area, rejected perfectly. These areas that I draw out reject perfectly almost every single time as take profit levels. This is great take profit levels because these are areas where price will go against you. You want to be maximizing your profits. And currently, again, this trade already hit take profit. I'm not holding any runners. It's the end of the day. Not going to be holding on to trades like that, especially spread hour. But that's going to be it for all trades I took today, man. As you guys can see, all my trades I take are really good risk reward ratios, mostly 1 to 3 do hit. And that's going to be it for today's video. If you guys did enjoy this little strategy, you guys can implement understanding liquidity and liquidity sweeps to your strategy. This will greatly improve your consistency and hit rate when it comes to day trading. So thank you guys so much for watching, and let me know what you guys want to see in the next video, and I'll see you guys in the next one. Make sure to join the Discord down below. It is free. Peace.